All right, happy Thanksgiving to everyone and happy holiday to all of you that don't celebrate Thanksgiving. As you can see, it is 2 o'clock. Again, I'm a little bit late, but I just got a feeling to make this video update on this portfolio right now for some odd reasons. But again, this is the fourth video. My account right now is 58 grand, which is a little bit more than 50% to my goal. So this is a weekly chart, monthly chart, 3 month, and then 1 year. The account itself, I will show the overall investment towards the when I reach the goal basically. And as you can see, my option positions, I got two of them, and then my stock positions, I got two of them. And the first one, it's a cover call, so against the shirts I have, 1,300 shirts. I'll explain a little bit more, but again, if you, for those of you who don't know or familiar with cover call, basically I sell this call against my stock position to protect it. So on December 4th, if Momo is sub 1750, I'll basically going to keep all this premium, which is $455, 13 times 35 cents. Or all you have to do is add the market value to the total return. Basically, you gotta make both of them positive first. So if this thing does become worthless, I'll get to keep the whole $455. And yeah, that's that. And then the second position that I have in turn, the option position, it's Netflix calendar spread. This is basically a replacement of the Apple calendars. I believe it is a calendar spread when I bought. I got out of it with north of $1,000 game, so it's a pretty nice game. But again, this one, it's a calendar spread, expired December 4th, $500 strike, and then 485. So if you look at the Netflix chart, let me show you the 1 year. As you can see that in May and in June, this area acted as a pretty nice resistance. But when you broke above that, you can see that it happened the support for the last three times for the major corrections. So Netflix has been trading sideways, and I believe that they will bounce again to north of $500. So what I'm planning to do with this one is that if it does go above $500, I'll be basically forced out of this position. But again, that will be north of a $1,000 gain. My plan is that I hope it doesn't go above, I hope it stay around $490 so that this $500 expire worthless, and I basically going to keep this $955 premium, and then I'm going to turn this into a vertical spread by selling December 31st. As you can see, my long call here, 485 strike, and I'll sell this $500 call against it to make this a vertical spread and collect roughly around like $1,000, depending on the price of the Netflix at the time. So that's my plan with Netflix right now. And then the next one, it's I talk about this one a lot lately. Not lately, but in this portfolio because it's the main stock in the portfolio. Accounts for 61%, and then MOMO accounts for 36%, so north of 95%. So almost near 100% of this portfolio are based on these two stock positions. Um, Canada Goose, I talked a lot about it in the past, so let me just show you the game. It's 56%, and that's about it. And then this one's a new position that I added. I sold Store Capital with 100% gains, I believe. I bought it around 15. I sold some call against it, and then I bought some call trading around swing trading a bit, and then I sold the stock position not too long ago, near $29-30. So it's a pretty good. It's 100% return, and I think that it definitely can go up more. It's a great company. I'm not saying anything about the prospect of the company, but I'm just saying that I think that Momo has more opportunity. So Momo and Canada Goose both have something in common, and it's that they both fall into the cyclical type of category. And I believe coming out of this pandemic, both of them will be a fast grower, meaning they will grow their revenue 20% plus. So if you look at the MOMO most recent quarterly report in September, you will see that the revenue has been declining. There's a reason for that, of course. And then if you look at their annual report and look at the overall yearly growth rate, basically you'll find something pretty interesting. But again, this stock has been hurt by this pandemic, and it's not doing well since 2019. But it's a cyclical business. Let me just tell you about what Momo is. I'm sure that a lot of you don't know what that is. So MOMO, it's kind of like a Twitch of China. So people will stream live video, not for games. They do games, but it's not known for game, but it's known for social gathering. So when you have a host, you can invite random people who watches you to the live stream, and basically just chat around and socialize. You can have 6 people, have a lot of people. There's a chat box that you can type words and stuff. But there's like if you want to meet girls, whatever, boys, girls, guys, it doesn't matter. So if you want to meet people, you can register with the host, and they will put you on. And the host is just lay people, so everybody, well, everyday common people. So it's not like celebrity or stuff like that. Although there's some people that's pretty famous in that platform. There's like games that you can play together with other people. There's You can watch movie with other people. The way that this company makes money is by live streaming. Number one, number two, biggest percent in terms of percentage of the revenue comes from the virtual gifts. So if you want to send somebody flower, you can buy it with real money, and you send it to the streamer. They will get a percentage off of that, and then the company itself will get a percentage off of that. So it's kind of like Twitch, where you send donations to people, and a streamer gets the donation. But for Momo, it's a similar concept, but it's doing a way that it's like a emoji type of way. So it's pretty neat. But again, this company, if you look at the balance sheet, the quarterly reports, you can see that on a net base, they're worth about $5. And when I do this intrinsic value calculation, I don't look for exact number. You just look for the approximate. Like, how would you put it is that when you look for intrinsic value, um, the way I was learned, basically, you will know a woman that is old enough to vote without actually knowing her age. And you can tell the size of the shoe that a man wear without knowing the exact size of the shoe that he's wearing. So it doesn't have to be exact. You just need to know. Momo at around $15, $3 above, well, 3 times above its intrinsic value of $5. I don't think that's outrageous. I don't know if Momo is gonna worth $20 or $30, but if Momo, let's say it's 50, 60, or $70, I know that they are on the high end of their valuation in terms of the balance sheet and then the income statement. But around this area, I think that it's a buy. So again, I'm not trying to calculate the exact intrinsic value. Investing into art, it's not a exact science. So I don't need to know that. But again, if Momo does go below $10, I will stop putting on call options, which it's much cheaper than buying the shirts. So this is the fourth update, and I hope you guys enjoy. If you got any questions, let me know, and thank you.